My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be with my friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. It was always about the hurdles. The hurdles this week that we had to clear before the market could go higher again. Namely the Fed meeting, the Apple quarter, and today's employment report. Once the hurdles were behind us, even if they weren't perfect, we knew that we could have a relief rally. Sure enough, today we got more of a sigh of relief. We got a bullish jaunt that made this week's torture more bearable. Dow only gaining 547 points, S&P jumping 1.85%, and the NASDAQ pole vaulting 2.25%.
House of pleasure.
For the first decade of my 40-odd years in this business, I would dread weeks like this. And I would do my best to trade out of them, to get flat, so to speak. But over time, I've come to embrace the unknowable, as long as it's on a schedule. We knew the Fed would meet, right? And there would be a semblance of reliability to it. Why? Because, like, Jay Powell, he's a pro. He knows how to handle himself. Sure, I wish he'd acknowledged the destruction wrought by the collapse of First Republic last weekend. But I'm still glad he tightened by a quarter point, because today's hot employment number fully justifies that rate hike, and maybe even another quarter point in the next Fed meeting. As far as Apple, what do I tell you? Own it, don't trade it. And that philosophy worked again. I refuse to be shaken out of the world's best company by one errant component supplier or a couple of joker brokers who say, hey, things have gotten weaker. It was a classic misdirection play. Sell, sell, sell. And I hope you didn't fall for it. I did my best to keep you in. We saw something similar, by the way, from AMD, another charitable trust named after a reporter a few days ago. But if you sold into weakness, you're kicking yourself now that we know they've got something big cooking with Microsoft and the artificial intelligence front. Look, I don't tell you to not sell the stocks because I want you to endure a huge amount of pain.
The House of Pain.
I want you to endure
House of pleasure.
Then today, we cleared the third hurdle with a hot jobs report. Definitely not what the Fed wants to see, although it tells you a great deal about the resilience of the economy and how amazing it is. The important thing, though, is that we got it over with, which is what allowed us to roar, especially if you consider that previous months turned out to have been overstated a bit, so maybe the actual spike in hiring was more, let's say, even. We know there's still one more hurdle, and that's the debt ceiling. That's much tougher. It'll linger until June, probably, which is why I recommend doing some selling near the end of the week, because you want some cash on the sidelines as this crisis plays out. And it will play out, but it is a crisis. But let's not get ahead of ourselves. This coming week is a lot less difficult than the one we just went through, in part thanks to none other than Warren Buffett. That's right. CNBC will be back with Oklahoma and Omaha once again. Oh, look at this. Here you go. So I don't know what you're doing tomorrow. I mean, maybe this is when you get up after Cinco de Mayo, right? And it's going to be wall-to-wall coverage starting Becky Quick at the Berkshire Hathaway annual meeting, which usually spells good news for the market on Monday. It's like a Buffett hangover, kind of like what you'll have over the Cinco de Mayo case. Because Buffett's an optimistic guy, and his folksy defense of American capital markets usually leads to a positive reaction. Yes, people can actually remember. They can remember from this day to that. It's rather extraordinary. You don't necessarily need to sell into the Buffett bounce, but I think a ton of people tried to get in ahead of it today. That was part of the big rally. They know the pattern, and it's true, and I've watched it for years. You buy them today and unload them midday Monday to people who didn't know how bullish Buffett was. So definitely, if you're going to buy anything, wait till after the selling stops. Tyson reports Monday morning, and it is, frankly, inconceivable to me that this company can continue to be as awful as it is. It's become the benchmark of suboptimal. After the close, we hear from PayPal, another serial disappointer, although the last quarter wasn't as bad as the four before it. If you want upside, maybe you go with Skyworks Solutions, because it has a big business with Apple. And we all know now how Apple's doing, which is fabulous. Next, I find that if you want to get a read on the broader economy, you need to do what's known, you need to listen to the chemical companies, because they're pretty much the basis of so much economic activity, which is why on Tuesday I'll be listening to Air Products, APD. This industrial gas outfit competes against Cramer fave Linde, which is the cream of the crop. So if Air Products misses and pulls down the whole group, we are likely to be telling you, if you're a member of the investing club, to buy some Linde on weakness. Now, we still hear about companies not getting enough semiconductors. Global Foundries has been straight with us about why that's happening. So we'll listen to see if the chip shortage has finally been cured. This is an insanely difficult moment to pick semiconductor stocks right now. They have such divergent trajectories. Auto going different from telco, which is going different from data center. They're all in different cycles, with PC being the worst. These guys can help us figure it out. Circling back to Warren Buffett, lately his favorite stock has been Occidental Petroleum. I believe he'll speak favorably about it this weekend. I doubt the quarter will be anything to write home about, given the recent decline in prices of oil, but it might have a Buffett trampoline under it when it reports after the close. Travel has been red hot, right? We all know that, yet Airbnb has not been able to benefit from the way, say, Marriott has. I wonder if this could be the quarter that perception changes, if not reality. I'm looking for some good numbers, especially from high rollers. They were supposed to be absent, according to the last time that Airbnb reported. Now, the one big macro number next week is on Wednesday morning, and that's the consumer price index. Now, I think it's going to be hot. Now, why? I look at the components, and the component that's really driving everybody crazy, particularly the Fed, is housing. Fortunately, gasoline's been crushed, but we aren't getting a break in rents, and rents are what are factored into the CPI. I also want to watch for apparel. Prices have come down hard for close of late. I hope the CPI at last captures those changes. It sure hasn't yet. The CPI is not being calculated correctly. I wish I could have a crack at it. I would fix it. Also, that is not hubris. I actually look at the stuff. Also, Wednesday morning, we get results from Wendy's. And I think it could thrive like McDonald's and restaurant brands. Remember, we had them on the other night? Because Wendy's shrewd operators, too. If they want their stock to soar, they just need to contact Jensen Huang, CEO of NVIDIA, to see if they can use AI to take drive-through orders, thereby saving a fortune on labor costs and never having mistakes because, well, ChatGPT, it doesn't even know how to make mistakes. Now, just so you know, I want to asterisk this quarter. My wife only had one Baconator the whole last 3 months, so she didn't help the cause this time. Wednesday evening, we have the most consequential reports. Walt Disney. The stock roared today for no particular reason. And I want you to know what we've been telling Investing Club members. Do not buy Disney for this quarter. Interim CEO Bob Iger hasn't had enough time to adjust to a new world of fewer viewers and higher costs. I buy it after the quarter, not before. This week, we got some incredibly positive numbers from Simon Property Group. That's the shopping mall kingpin. Does that mean the Tapestry, the owner of Kate Spade, Coach, and Stuart Weitzman, denizens of Simon's stores, will have the mall, will have a great quarter when it reports? I wish I could be more definitive. These days, if you want good retail exposure, I just tell you to go buy MasterCard. Next, has Yeti stabilized? Everybody loves Yeti, right? I mean, I carry one around. Don't you? You have one, but the stock's been not that great. Yeti knockoffs are responsible for that. In the world, it's impossible for them to beat the numbers because there are so many knockoffs. I think it's doing fine, but anything consumer discretionary has been a loser. I like to listen to them, though, because I think it's such a terrific company. I just wish that other companies would stop stealing their IP. Finally, on Friday, after the close, St. Louis Fed President James Bullard speaks. You know what? This guy's become my true north in this market. Today, he said the Fed's finally caught up to where it had to be in order to beat inflation, and he also acknowledged that we're near the end of the tightening cycle. That is my thesis exactly, and I'm getting it from him more than he's getting it from me, believe me. If we have more banking headaches next week, I wonder if he'll say we've gone too far. I trust him, and I can't wait to hear what he says. He had some very good comments today. Bottom line, we know there's no real gauntlet to run next week, but we also know the clock's ticking on for a debt ceiling deal. I don't have much faith in either side, and I don't trust the process because the market fell 19% from peak to trough during this period in 2011. I wouldn't be surprised if it happens again now that things are even more rancorous in Washington. So despite jumping 3 hurdles, remember that the fourth one will be lurking soon with no resolution in sight. So you might want to do some selling into the rally that began today and I believe continues through the week. I feel like taking calls, just my predilection. Let's go to Rex in Missouri. Rex.
A big Kansas City barbecue capital of the world. Booyah, Jim.
I like Arthur's barbecue capital of the world. What's going on, Rex?
Love Arthur's as well. First time, long time, Jim. We had one heck of a Super Bowl with your Eagles.
Well, yeah, except for the kind of score. But go ahead.
To many more ahead. Hey, Jim, my stock is Walmart, WMT. I entered the stock around 140 in January. Love Walmart Plus and the fact it's overall defensive in a slowdown. My question to you is, since I owned Amazon already, is this too redundant? Or
No, not at all. They're very different. Amazon's trading on its web services business anyway. I think Walmart is a winner. I like the stock very much. I want you to stick with it. All right. Now, we've gotten through most of the gauntlet, but the debt ceiling could, oh, man. But the debt ceiling could cause some real problems. Hey, I'm a pro. It is Friday. I'm ready for this. I'm not willing to endorse a lot of buying until it gets resolved and maybe do some selling at the end of the week. On Mad Money tonight, Cigna reported a beat and raise quarter that surprised the street. So what was behind the company's strength? I'm getting the latest from the company's top brass. Then watch out, King Charles. There's a new king on Wall Street in the form of DraftKings. And I know those are often talked about together. I'm learning more after today's 15% spike with the CEO. And Cloudflare soared to the clouds after Investor Day. So what could be next for the cloud stock after the recent seesaw action? You don't want to miss my exclusive. Plus, you'll see what we're all doing after the close today by looking at this incredible New York Stock Exchange photo of none other than Corona and Modelo. But of course, we can't shoot that. But that's me just imagining that we can. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.